The Latino economy would be fifth in GDP in the entire world if it were just a separate country. That's today, right now, and still, again, eye-popping. What are you seeing about when it comes to growth going forward?
So the growth, again, Frank, thank you for inviting me. The growth has been astounding. That 2.8 trillion to 3.2 trillion in 1 year. Those are eye-popping numbers, and to think about it, it's only the U.S., China, Japan, and Germany that are larger economies than the U.S. Hispanic market. And the growth that is driving that is the demographics. It's the youth of the population, 62 million people that are on average 9 years younger, and families that on average have 3 children versus 2 children. So you can see that growth is going to continue just by the pure facts of demographics.
So you're saying the average Latino is 9 years younger than the national average?
Correct. About 30 years for the Latinos and about 39 for the national average.
Okay, and obviously a bigger family means you're spending more money.
Absolutely. You got 3 kids, you're spending 50% more than 2 kids, without a doubt, at least.
I want to talk specifically about your business, Palladium. You've invested more than $1.2 billion in Hispanic-led businesses or businesses that address the Hispanic market. When you're investing in companies, are there certain sectors that you're focused on? And talk to us about your investment strategy.
Sure. So yes, that's correct. We've invested over $1.25 billion in the last 20 years in which is the majority of our investments have been in the Hispanic market. And it breaks out the industries are consumer food, which makes sense. We have a company that called Del Real Foods that sells 80, 90 million tamales a year. A company called Kirsch Foods that distributes proteins starting in South Florida. But we also invest in healthcare businesses, in services, financial services, business services, and industrial, but really consumer food, services, and healthcare are the main areas that we look at.
Can we talk to you about the broader private equity situation right now? We're hearing higher for longer. We just talked about rates right now at the highs we haven't seen since 2007. How does that shape your perspective when it comes to deals?
So it's a great question. What that means is that the cost of debt clearly has gone up, and it's making deals harder to close, particularly as you go up to the higher end, say, to billion-dollar deals. But the opportunity, the growth that's driving these companies, the Latino companies, particularly the microeconomics of it, great deals always get done. So you have to be prudent as to how you use leverage, and that's where being in the business for a quarter century helps. I think there are going to be continued opportunities in the Hispanic market. We've seen it accelerate since the pandemic. In the last 4 years, we've more than doubled our investment pace and doubled our rate of value creation, which you would have thought since the pandemic would have been difficult to do.
All right, we're almost out of time, but I want to ask you one thing. According to Crunchbase, only about 1% of all PE funding goes to Hispanic-led or Hispanic-founded businesses. What do you think investors are missing out on?
Well, I think what they're missing out is how to do it, because you identify a market at 62 million people, $3.2 trillion, but then you have to segment the market, because marketing to folks of Dominican descent in Upper Manhattan versus Cubans in Miami versus Mexican Americans in Texas, California, it's a very it's a beautiful tapestry, and you have to understand it from the inside.